Hello everybody and welcome to the Investing Show. Today we're going to talk about the stop loss. And as the title might reveal already, it is about stopping your investment losses. A stop loss can be an extremely useful tool. You can go to the grocery store, you can go working, and you're still confident that your investing position will be closed at the price you indicate. There are actually two types of stop loss orders. We have the limit order and we have the market order. It is essential that you use the correct type of order, otherwise you might get a bad surprise. In this video we will let you know how to decide which stop loss order to use and how you can actually apply it. You want to read more about investing or about the stop loss? Take a look in the description, because there you can find a lot of useful information to help you achieve success. So, what is a market order? A market order is the first type of stop loss order that we will discuss in this video. With a market order, you tell the broker to sell your stocks against a certain price, no matter what. So with a market order, you can, for example, indicate that you want to sell your shares or stocks at $10. With a market order, however, there is never a guarantee that you actually receive this price. When there is a situation of slippage, which can happen when the price, for example, goes down very rapidly, you might not receive the price that you desire. So instead of selling the stock for $10, you might sell the stock for $9 or $8, increasing your loss. The benefit, of course, with a market order is that you will always sell your stock no matter what. As you see in the picture, however, this is not always beneficial, because after such a big decrease in price, the price of a stock might go up again and you lose money. Therefore, it might be interesting to use a limit order instead. So besides a market order, you can use a limit order. But what is a limit order, you might ask? Well, a limit order indicates a limit or a minimum price for which you want to sell your stocks. Again, as the example in the market order, you want to sell your stock at a price of $10. However, you do not accept a price lower than $8. In this case, when the price goes down to $7 directly, because there's some sort of exceptional decrease in price, you still have your shares and you do not sell them even though you use the stop loss order. This can of course be beneficial. Look at this example. The price went up again. And in this case you don't sell your shares, you still have your profit. However, in some cases a stock might decrease even more, like in this example, and then you lose a lot of money and you're left with some worthless shares. Therefore, if you want to be certain that your shares are sold no matter what, you should use the market stop loss order, and if you are not so focused on selling your stocks, then use the limit order. But how do you actually set up your stop loss inside your broker account? Well, first I want to share some good news with you. Nowadays, practically every broker allows you to use a stop loss. So in this example I'm using Plus 500, which is a great broker for active trading, but whatever broker you use, you can use a stop loss. Otherwise, run! Well, so I moved my mouse to buy some oil, because, well, why not, right? And then, besides buying the oil, I want to set up a stop loss order directly. So I check the box that says stop loss and I fill in the price at which I want to sell my barrels. Easy like that. So if you are very concerned about selling your shares at a certain price, some brokers also offer the possibility of using a guaranteed stop loss. With a guaranteed stop loss, you will sell your stocks no matter what at that specific price. So if the price goes down, the broker is screwed and they have to pay the loss. However, using a guaranteed stop loss is not free. Therefore, you should only use a guaranteed stop loss when you are worried that your normal stop loss won't be executed properly. This can be the case when there is a high level of volatility on the markets. Another special and very useful type of stop loss order you can use is the trailing stop. A trailing stop moves in the direction of the price. So let's say you want to sell a share when the price goes down $2 and the share moves up $2 more. In this case, the stop loss would also move up $2. And this actually continues, so it makes it possible to optimize your profits, because you never, of course, know how high a stock might go up. And in this case, well, it doesn't really matter, because even if you're on the beach in Ibiza, or you're, I don't know, doing groceries or doing your laundry, you always know your stop loss is doing the work for you. So now that you know how a stop loss works and how to set it up, we can quickly and briefly discuss the benefits and the disadvantages of a stop loss. Well, a big advantage of the stop loss is obviously control. Because when you set a stop loss, you really can do whatever, and you're always certain that your stocks will at some point be sold if you do it correctly. So yeah, that's really a benefit, because personally I don't like being behind my computer all day, be like, well, is the price at $10 yet? Is it? Is it? Of course, like in the real world, every benefit also has a disadvantage, because it can't just be sunshine, there are also clouds and rain. And in this case, a clear disadvantage is that you might lose profits as well with a stop loss. As you see in this picture, a stock often does not move up in a straight line. It goes up and it goes down a little bit, goes up a bit more, goes down a little bit if it's in an uptrend. And when you put a stop loss a little bit too tightly there, you might end up closing a trade way too quickly, and then you lose a lot of potential profits. So be careful there. Now that you know what the benefits and disadvantages of a stop loss are, the question is, of course, whether a stop loss is also for you. Well, personally, I do not use a stop loss on my stock portfolio, but I'm trading more for the long term. So I select my stocks and I do not really look at them for a while. However, when I do speculation, which I also sometimes like to do, then I definitely use a stop loss, because with active trading, risk management is a bigger part of the game, so to say. Therefore, it is certainly wise to test for yourself whether a stop loss works for you or not. In the description you can find information on how to open a demo account yourself, so you can practice with using a stop loss. So did you like this video? Then please press the thumbs up, and if you want to have more information about investing, subscribe, because we will make more videos. Goodbye.
We hope you found this little video very nice. It should not be taken as investment advice. Remember that investing always carries some risks. Don't invest with money that if lost would be missed. Video might contain affiliate links.